Hi guys, Connor from Zenfinex here with an update on the latest gold forecast recorded a few weeks ago. Now we've had significant developments after the Fed's upgraded economic forecast last night, and we have a real key battle between two major themes, and this is the Fed versus the rising yields. Now gold surged last night after the economic predictions, but it may not be as clear cut as we see on the chart. Okay, so I want to dedicate all of the fundamental analysis on the Jerome Powell or the Fed's economic predictions yesterday. I think it's really important that we have listened to what he said. It's going to really shape the outcome of gold, especially for the next month, which is why I do these videos, right? So what happened yesterday in the economic forecast? Well, the Fed reaffirmed that it would keep its interest rate near zero until 2023. No real surprise there. And the central bank also said that the US economy was on track for its fastest expansion in nearly 40 years, predicting 6.5% growth in 2021. Now, the markets took this news as dovish. The calming Fed language saw an initial spike in gold. This was due to this risk-on mood that we saw. We saw it in the equities, and it was helped by a weaker dollar as well. Now, it would be really easy to jump on that bandwagon of risk on. I know we all love it, but it is important to take a step back, right, and see what is really happening here. Now, US 10-year yields, they're breaking or broken key resistance at 1.5%, paving the way really for 2%, I believe. At the same time, the Fed's inflation expectation was 2.4%. This is above their 2% target. And these tighter financial conditions in a rising rate world opens up the opportunity for a stronger dollar. And this could put pressure on gold on a market which is already suffering as of late. So the real question that we have here is, can gold reinvent its inflation hedging nature? And can it shrug off rising yields? Let's take a look at the chart. Okay, so I am on the chart. And just for a laugh really, this is the 1 minute chart. Now, this was, if I zoom in, this was what happened at the start of the Fed speech yesterday. Look at all this lovely upside. This is what I mean about not being fooled initially how the markets react. Well, look what's happening as I'm recording this video. Pretty much the gains wiped out already. Says a lot to me. Now, let's have a look at the daily chart. And as you can see on the daily chart, we are on a downtrend at the moment. We're making lower highs consistently. And I want to be balanced in my analysis here. I want to give a buying and a selling opportunity. On the daily chart, I'm only really seeing the potential for a selling opportunity, really. And I'm looking really at this level. It's situated at around 1780. This would be our daily order block from a break of structure. Quite a significant break of structure really, because it broke two lows. You can see this low here and this low here were both broken by this impulse. Now, it would have been nice if the markets moved nicely up into our level yesterday after the news. It wasn't quite to be. And if you are a break and retest trader, then we nearly retested the structure line here, which would have been a selling opportunity for you guys potentially. On the daily chart, I'm kind of waiting for this level. Now, what would be really interesting on gold is if we can break below 1675. If we break below there, then I'd expect a retest of around the order block around here, back up at 1730. I think it's more likely this will happen, and then we can look for a move further down. I can't believe I'm saying that at the moment, but yeah, that's where we're at. I'll just add in as well our moving average. They are powerful on the daily time frame. And look, we have the 50-day moving average that if we were to get a pullback into our order block here around 1780, it would actually mark a retest of our 50-day moving average. There's a nice confluence there, depending on your patience. I'm okay to trade other markets until price comes into this level, and I'm happy to set an alert here as well if the time comes. That's what I'm seeing on the daily chart anyway. And if I look on the 4 hourly, and I'll remove all these drawings, again, look, a series of lower highs, lower lows. Now, if we were looking to sell gold, then we could look at this area here, and this was the 4 hour order block. That broke some significant structures, right? Actually, it's got nice imbalance in as well. Now, if you see yesterday, if I was trading at whenever it was, 1 o'clock in the morning, which I wasn't, price actually did come up and test our 4 hour order block here, and we've had a really nice reaction since. Now, if I zoom right in on that, it has touched, it has already mitigated, which to me is a bearish sign with the reaction at the moment. So we'd have to wait for the chart to take shape from there. Now, there is a really interesting level for a buying opportunity as well, and we're in that level at the moment. This is another 4 hour order block. And for you gold buyers out there, then there is an argument, or a very strong argument, that once we made this bottom at around 1680, we did have this run up and break of structure. Was it break of structure here, break of this high? Since then, price has moved up, created a newer high, come down and created a higher low, and another bullish impulse and a break of this structure here, which I'll mark for you, BOS, break of structure. Now, where this high was broken here, we could argue it was from this level, and I wouldn't mind gold coming down to test this level, but for more of an intraday position, if you're looking for, I would say, a riskier entry, then we do have this level here we are in at the moment. Now, I've already marked that for you, but I'll go down on the 1 hour chart, and you can see it's a lot more prominent where we had this bullish impulse from the Fed, and there was a lot of volume in this buying pressure, and we can move our area down into here, which we're literally, as I'm recording this video, reacting out from. So what I'd be looking for on a lower time frame, even if it was on the 1 minute, if I zoom in, you can see prices falling quite sharply into our area. Now, I'd be looking for some form of structure break. Now, this may look like that, not quite happened yet, formed a lower high, then there's our break of structure there, and we'll be looking for an entry off of something that's left behind here for a nice risk reward ratio. For take profits for this level, I'd be looking, because I am, at the moment, I am a bit bearish for gold. I'd be looking really to fill this inefficiency as I'll take profit. Oh, sorry. Again. As I'll take profit here. And if we got an entry, it'd be a nice risk reward. So if that doesn't happen, then we can, if it violates this order block here and falls further down, then we have got this area here which does have inefficiency as well. So some opportunities for both sides at the moment, and if you like to trade in between these levels, and that is fine as well. I'm going to wait to see how this market reacts for this buying opportunity. And other than that, guys, hope everyone has a great day. Please like and subscribe to this video. You can message me on my Instagram with your opinions on gold, or you can drop them in the comments section as well. Any opinions here are valued, and I like to listen to other opinions as well. Hope everyone has a great day, and I'll catch you all for the next video, which will be next week.